the Real Talk Podcast. I'm Andrea Castanetti. Today we are talking money, the market, and I have my two favorite guys. Well, maybe my two favorite guys. We have Chris Heaney here from Province Mortgage. He's been a mortgage broker for over 20 years. I know you started when you were about 20.
I was about 16.
Got it.
I was either that or paper route.
Or both.
Right.
And we have Brad Morse from Century 21. He's been an agent for 7 years. So funny little side story. We actually met at a training. Chris Heaney, he was the sponsor of it. And Brad and I, we were on the A team.
Mm-hmm.
And, you know,
That's right, you were on the A team.
That's it.
Absolutely.
That was the best team there, yes. I think the most important part is we're all about networking. So these guys, we fell in love with all of each other instantly, and we have our meeting of the morons once a month, or we try once a month, go out to lunch, breakfast, dinner, talk about, the market, and, it's all about having some balance.
Mm-hmm.
And we talked about this in the last podcast, how hard it is. You get so wrapped up in your clients and working 7 days a week that it's good to kind of kick back and have a little fun with each other. So today we're talking about mortgages, where to start, how to get one, the rates. I think the most important part, and one of the most, for us especially, the questions we get, I want to start looking for a house. Awesome. So the problem is, we have our clients, they go right on Zillow, they start searching, and they're like, this is the one. $750,000. Great. Our first question, are you pre-approved? Well, no.
Why would you do that?
Right. Okay.
I just know what I can spend.
Exactly.
I know what I can afford. I did the calculator. So there's so much more into it, and that's why having an experienced mortgage broker on your side is absolutely crucial. You need to know where to start, what the best loan program is, what you can afford, and the money that it's going to take, and a little thing called credit. So the biggest thing that's important.
Exactly.
So we're going to talk to Chris first. Basically, when someone comes to you, you're obviously going to have them fill out an application,
Right.
talk about qualifying questions. What are it's because it's been a while since I've gotten a mortgage. And I will say, when I got my first mortgage, this was back in the day, the mortgage broker hand wrote.
I remember those days.
Yes, he said, how much do you want a loan for? I said, well, I'm building the house next door, $800,000. There you go. And I was like, it's that easy? So, hence, that's when the mortgage,
Yes, exactly.
that's when, we had the
Right.
crash.
Thanks a lot, Chris.
Yeah, exactly. I always say I saw a lot of stuff. I wasn't part of it. Yeah.
Now that I'm in this business, the fact that literally he said, how much money do you want?
Right.
Wrote it in a pencil on an application. What's your income? I don't know. I think I was self-employed.
Right.
My income varies. I make X. Great. Write it in. There you go. Here's your loan. I mean, the fact that even happened is so mind-blowing to me. And now to get a loan, I just closed on my house a year ago. I had to give my firstborn that I don't have.
Exactly.
So
especially being self-employed, they look for everything.
Everything.
Yeah.
So if an average borrower, say Siobhan, who's behind the camera, she comes and says, hey, Chris, I want to buy this house. Well, how do I even start? I've never gotten a loan before.
Yeah. First things first is we're just jumping on a web. Either I always say 3 ways of doing it, right? What we have to do is get an application in, right? And we need to look at assets, income, and credit. And we can either do it on the phone. I can manually type it in person, which doesn't happen now, or just go onto my website and do it. It takes 10 minutes. I joke with my clients and I say I'm chatty, so go online and do it. It's gonna take you 10 minutes. Exactly, I know, right?
He talks.
Yeah, it'll take you 10 minutes as opposed to an hour. So
America's friend.
Exactly. Yeah. So we start there, and from that, it's honestly once you do that, I mean, you have a really clear indication of where you're at. If there's an obstacle, maybe it's credit. We know what we're dealing with, right? And I always say it's never too early to get pre-approved, because if there's something on your credit report that you don't know about and we need to take care of it, we can take care of it. We know what we're dealing with. We'll put together a plan. It's not like these, great unknown and throw up your hands in the air and say, I'm done.
Right.
But no, first things first is, get it in line. So the 3 things that go into, the ability to repay essentially is what you're shooting for to buy a house, is income, assets, and credit. So we just got to put all those in the system. It's real simple. It takes 10 minutes, and from there we just look and say, your price is, I wouldn't go beyond X.
Right. And if someone's credit isn't up to par, what's the average credit score that people want to be in that range?
It's kind of all over the place. FHA with certain lenders will go down to 580.
Okay. And we'll talk about what FHA is for those that don't know.
Yeah, and then I would say for conventional,
580.
That's low.
Yeah.
yeah, it is low. I
Jeez.
don't know if so what they call overlays. A lot of companies will say we're not going to do that. A lot of lenders,
Yeah.
Brokers. But then essentially for conventional financing, you want to be at least 620 to get your foot in the door.
Okay.
And your buying power, you're kind of at the mercy of Fannie Mae and Freddie Mac at that point,
Right.
because you have a 620 FICO.
Yep.
I would say that you want to be 680 and up.
Okay.
720 ideally. Yeah.
The question is now, what do you say when a client says, I don't want them to run my credit?
It drives me insane.
I mean, we hear it often. I don't
Yeah.
want, but if they don't run your credit, we don't really know where we're
Yeah, I
sorting.
tell them they have to do it. Sometimes it's a soft run too, right?
Right.
It's not necessarily a hard pull on your
Right.
credit.
So
It's not going to
mortgage
ding
pull-
you that badly,
Right.
if
Right.
at all.
So the market's kind of going. There's services now, and we're picking up on one where you pull a soft credit.
Yeah,
Yeah.
that's
The
fine.
reality is a mortgage pull is technically it's a hard pull. Theoretically, it's a soft pull. It
Okay.
doesn't act like you took out a credit card or a store card or something
Right.
like that. Yeah.
And another misconception is, say they go to you, they
Mhm.
get a pre-approval, you ding their credit, obviously, to check it, but then they want to go to Joe Schmo here or,
Right,
Larry
right.
the broker here. Will that continue to be hard credits? Because what we tell them is,
Right.
they know that you're obviously shopping.
Yeah, it'll show up, and a lot of times too is there are services out there that will actually alert me that so and so's credit has been repulled.
Okay.
Yeah.
I'm a big fan of freecreditreport.com.
It's funny. I actually was going to use that myself last week.
Okay.
I've never personally used it. I just pull credit. Yeah.
I mean, I think you can do it once a year.
Once a year, yeah.
Freecreditreport.com, and kind of just gives you, a baseline of
Right.
where you're
Right,
at.
You
right.
really
exactly.
should know where you are.
Right.
Especially
I'm
if there's
amazed. Yeah.
fraud, right?
Right.
Somebody, identity fraud.
Right,
Exactly.
right.
You don't know.
Yeah. I am amazed at how many people don't know their credit
At all.
at all. Not even.
And another
yeah.
thing too, and we tell our clients as well, I won't speak for you, but I will speak for you. They always say, this is my credit, I know it, but they forget to tell us that they might have had a bankruptcy,
Right.
or,
Yep.
they haven't paid medical
Exactly.
bills. Everybody, this does show up when the mortgage broker is doing
Right.
their due diligence. So
Exactly.
just be honest ahead of time, and then we can figure out, if you're not ready now, and this is what we tell them, then you'll be ready down the road. We'll put you on the plane to get
Exactly. Yeah.
Exactly.
I refer my clients to a credit repair agency, but it's a woman in Clinton that I work with, Casey Chafin,
there. Okay.
and she does an amazing job. But she's not. It's not like 1-800 credit where she's just trying to separate you from your money.
Yeah.
And they do nothing. I mean,
Right.
she's, she gets as granular. An example, I worked with a couple in, that I referred to her out of Worcester. And by all accounts, their credit should have been higher. They had done nothing wrong.
Yep.
Actually, the clients, we sold them,
Don't say their name.
exactly, I know. But what they did was, she recommended to the husband and wife, she said to the husband, you take out a $5,000 credit card. To the wife, you take out $5,000, keep it for 1 month,
Oh.
and then after a month, put each other on there as authorized borrowers. Their credit scores went up like 50 points.
Wow.
So those are little tricks.
Those
that,
are
yeah,
great. I know
yeah.
Siobhan has a question for us.
I want to
Yes,
go back
this
to
one.
Andrea's question about the number of hard inquiries specific to mortgage rate within a set amount of time. I think we've heard like 2 weeks. Yes, it's going to show up.
Right.
Does it count? Do they each count the same? I think is what the buyer's concern is.
Right.
Or do you get so many hard pulls in a set period of time where people understand, hey, you know what, you're rate shopping, we get that.
Exactly. So I'm gonna defer to the big picture. I'm gonna say the credit system is like the Wizard of Oz. Nobody really knows what goes on behind the curtain. What I think happens, though, I have been told, and I think this is accurate, that mortgages within a 30-day period of time, you can have unlimited pulls without impacting your credit
Okay.
negatively.
Great.
I'm not entirely sure that's true. That's one of the many rumors or facts that have been thrown around about credit.
Okay. Interesting.
But to your point, though, it's the question. I get that asked all the time. Are you going to pull my credit? What exactly are you saving your credit for?
Right.
Right?
If you're not using it to actually buy something.
You want to buy a house,
Right.
It's not ideally at the end of the day you want to buy a house, but it's fascinating to me because I do get asked that question, and it's like, I'm gonna give you a loan for $500,000. Like
I
you
know.
probably should, but you went into Best Buy, you bought a $500 TV, and they pulled your credit
Right.
because you got 5% off or whatever the case may be.
Right.
And it's just
Every one of those credit cards, they
Yeah.
paying you.
Right.
exactly, yeah.
And you don't even realize
Right.
it. It's because you wanted to actually, tangibly,
Right.
you're buying a TV. So they're like, look what I got.
Exactly.
Right. And
Right.
I say
exactly.
5%.
Yeah.
When you break it down, is it really worth it?
Right.
I love it. So when your clients have a pre-approval,
Mm-hmm.
you sit down, and we were talking about this before we came on air. What do you tell them during this whole process as now they have a pre-approval in hand, as we go through until closing, what are the do's and don'ts?
So, I mean, as you know, there's a lot of people that come to us without any kind of pre-approval, right? They don't know what their range is. They don't know anything. You know, what they start looking at houses. They're like, oh, I love this $1 million house.
Right.
So that pre-approval is huge. You got to have that. I don't take people out until they have that. It's a waste of. It's an absolute waste of time.
Yeah. Yours and theirs. I mean, it's fun to it's fun to look at houses, but if there's no
I may
buying
meet them.
it,
I may go out and meet them just
Right.
to get that going. But it's an absolute waste of time, and a lot of people are wrong about what they can spend.
right,
Right.
right,
I like to have the credit limit when I mean, you have to have it. If they fall in love with a house today,
right.
they need that. They're not going to have enough time to go meet with
Exactly.
Chris
Right.
and get everything done in time, and they're going to lose out in this market where it's super
Especially
speedy.
in this market, you know.
Super speedy.
How many times have you worked with a client who suggested they get pre-approved, and then 12 o'clock on a Sunday morning, Sunday morning at noon, Sunday at noon, you get a phone call. I saw this house was just listed. Let's go see it.
Yeah, yeah.
And it's always the last minute. By the way, it's human nature. I do the same thing.
Yeah.
But to me, I chuckle in my own head, and I'm like, we had this conversation,
Right.
Yeah.
But I do the same thing in my own life. So
We hear it all the time.
Yeah.
I don't want to get pre-approved until I fall in love with a house.
Mm.
But, again, if people take anything away from this, the most important part is once you're at that point where you're finally taking the time, you've hired a real estate broker, and now you're looking.
Mhm.
Now, the market moves very, very quickly.
That's right.
So it's different than back in the day when, even 7 years ago when we started. You look at a house, great, it's on the market for 2 months,
Right.
plenty of time. I can
Right.
look at 84
Right.
other houses, then I can call Chris, get pre-approved. Now,
Right.
you
Yeah.
look at a house that's in a hot market, that thing is gone in 2 days.
And you really need that pre-approval, not contingent on selling a house.
Exactly.
Because
Yeah.
that's
Right.
like a kiss of death right now.
Right.
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 But one of the big, you were asked about do's and don'ts.
Yes.
You say you get your house under agreement, you're all psyched. Oh, you already have all the measurements done. You go out and blow a ton on furniture. Now,
Right.
now you're
Yeah.
really messing up your
Exactly.
credit
Yes.
again potentially,
Right.
and that can kill the deal.
Yes.
It can kill the deal at the end.
Right. We
Right.
were talking.
Yeah.
Chris got one of those frantic emails.
Yes, exactly.
At the end of the day, if you take anything away from today, if you have a property under agreement, do not go to Jordan's.
Nope.
Take out a
Right.
store credit card for $10,000
Right.
because if your ratios are close,
Exactly.
then you're screwed.
Exactly.
Mhm.
Yeah.
And imagine now you pull again. Now you're pulling everything a couple days before
Right.
closing, pretty much, and they say, "Wait, where did this come from? This
Right.
new ding
Oh,
on
yeah.
your
Oh,
credit?"
they'll pull it.
They'll pull it,
it.
yeah.
They
They
want to make
verify
sure you still have your job.
Right.
Absolutely.
Right. Don't
yeah.
get fired.
Right.
Right.
Don't buy a car and don't
Right.
go to buy tons
Yeah.
of furniture.
What my thing too is you're buying a house, right? Like theoretically, or the intentions are we're going to live there forever.
Right.
Most people, you can't wait a couple weeks.
Right.
Really.
I get it. It's
Yeah.
exciting.
It is exciting. I think that's what happens.
But
Most
go
of
on
stakeholders.
Pinterest.
Furniture
Right.
shopping's great.
Right,
But
exactly.
go
Go
on-
shopping.
Right.
Yeah.
Go
But
on
it's
Pinterest,
expensive,
Yeah.
create your vision board.
Right.
Know exactly where you're gonna buy, or put it in your cart at Jordan,
Exactly.
and then go.
Yeah.
to
I
the
just
store.
went to Jordan's yesterday.
What'd you
And
buy?
I'm like, I didn't buy anything, but I'm like, oh my god, couches are like $4,000.
Oh
$3,000.
yeah,
I'm
it's
like,
crazy.
Oh my
I
God.
know. Yeah.
Since COVID, I mean, everything has changed.
If you can get a couch, by the
Oh
way.
my.
Right,
Oh
right.
yeah.
If it's
Yeah.
not a year out.
3-month
Right.
delivery.
Yeah.
Well, we
Oh
were
my
ordering,
God.
I was building, of course, during COVID, and the delays for things were so
Mhm.
unreal that certain lines, were a year and a half out to get appliances.
Yeah. Right.
I'm like, wait, a year?
I
and a half?
had new construction. I had 2
Yeah.
buyers buying new construction.
Yep.
And they were delayed on closing 3 to 4 months because
Crazy.
Eversource couldn't get transformers to
That's
power
right.
up
Yes.
the
Yeah.
units.
Yep.
So they couldn't finish the
Yeah.
units.
Right.
Absolutely
And
crazy.
Eversource,
Yeah.
the
It's things you
utility
don't
company,
think of.
they don't really
garage
care.
doors that held up
I
at
know.
closing. They couldn't get garage doors.
Right.
How do you not get garage doors?
We're still having stuff with lights, right? They were missing some of the
Yeah.
lighting,
Yeah.
Right.
fixtures, and yeah,
The
it's
good
crazy.
thing is, the market is changing now, more in favor for buyers. They
Yeah.
have more of a fighting chance. 6 months, 9 months ago, I mean, we would list a property, we would have cars down the
Mhm.
street
Yep.
the first day of showings, we'd have 15 offers, and these were even properties that, I'm pretty confident in my pricing. Even if I thought they were high, we'd have 15 offers well over.
Exactly. Right.
And people are like, wait a minute, I didn't even get a chance to see it. I said, I get it. Now, at least it's calmed a little bit.
Yeah.
People are still coming out. It is technically still winter. But, Siobhan and I have hosted a bunch of open houses lately, and we've had 20 people at one,
Yeah,
10
yeah.
yesterday.
There's definitely
know,
activity out there.
They're here.
Yeah.
They're taking a
I'm
little
seeing
longer.
bidding wars again.
I think
Yeah.
I'm starting to see multi offers,
Yeah.
people waiving inspections again.
Oh,
because it's all supply and demand, right? It's a game of musical
Right.
chairs. There are no chairs.
Right.
I
right.
think right now the market's is where it is because of the inventory. I mean, it's
There's
just
nothing.
It's.
Right.
I looked at
Yeah.
Ashland as an example the other day, and as of Thursday, there's 3 now, but as of Thursday, there were 2 listings. One was land,
Yep.
and the other was a mixed-use 4-family.
Crazy.
That was
Now,
And all of Ashland.
All of Ashland, yeah.
historically
Wow.
speaking, let's look at the track record of every winter
Mhm.
for the past however many years. Winter is historically, slower.
Right.
Inventory is usually low, but I mean it is very low here. Now, as far as rates go, because now some people have decided not to sell, some people have decided not to buy.
Right.
Looking at rates, now I locked in at 2.75,
Oh my gosh.
which is
You're never going to see that again.
and I'm going to do whatever I can to
Yeah,
never lose
figure it
that.
out.
Never going to see that.
Never, because when I bought my first house, I was at like 13%.
Right. Right.
So, people are freaking out about 5s. I said, listen, I paid 13% years ago.
Right.
However, I did pay, I did get 2.75
Right.
a year
Exactly.
ago.
Right.
But now I feel like we're kind of midline. So let's talk about
Yeah.
rates a little bit. So because people get scared. They read something on Google. They're all like, the market's crashing.
Exactly.
Rates are so high. I'm never going
Right.
to buy a house.
Right.
So let's talk about that so we can kind of clear up misconceptions.
Yeah, I think the environment. So, first and foremost, I think the biggest, and to put everything into context, is rates right now. Let's say we're at, depending on the scenario, high 5s to low 6s, somewhere in there, ballpark. Every situation is different, but the average interest rate, and that's taking into consideration the 2s that we saw the past few years, over the past 50 years is 7.7%.
I figured it was in the 7s.
So I think what's really being impacted is just the psychological impact of like everything was 2.99, let's say, and down, right?
Yeah.
And that's where everybody has fixated on. It was somewhat artificial, right? I mean, those are just so.
It was
low.
very artificial.
Exactly, right.
So
And now I think we've gone the other direction too of artificially inflating them, but
Right.
but I just think that's just holding up so many people. Is just they're just fixated on the interest rate.
Right.
The reality is, and I did a video last week, and it kind of just really resonated with me once I started putting the numbers together. But 18 months ago, rates started going up.
Yep.
So buyers were stepping out and saying, "I'm not going to buy." So a $500,000 purchase that they didn't follow through with because rates went up has cost them $64,000 today.
Right.
But they didn't want to pay. So by the way, they've been renting.
Explain that so people understand.
Yeah. So okay. So let's take a $500,000 purchase price, right? So you bought the house for $500. It's now worth conservatively 18 months later. I'm going to say $550.
Yep.
Right? Is that
Yep.
we in agreement? Does that
Yep.
sound right?
Sure.
You would have paid your mortgage down by about $8,000, and let's say you $5,000 in tax credit, right? So it's $63,000 right there.
Yep.
But you didn't want to pay a higher interest rate.
Right.
Do the math.
Right.
Right. And I get it. It's an emotional purchase, but I think what happens is, I think too many people entering it's like a business transaction, right? And I make the distinction between a house and a home,
Yep.
right? House is what we're pushing paper around to buy,
Yep.
right? That we're working on. We're working on the house. It's your home. You're gonna live there,
Right,
and you just
And everything you do to it.
exactly
Right.
is yours. Yeah.
But this is why it's so important to have a real estate agent you can trust and a mortgage broker you can trust.
Right.
Because unfortunately, there are those that ruin it for us, that we have to
Absolutely.
prove ourselves that
Right.
we're genuinely in it for our clients. And we want them to make the best, most informed decision they can. We always say, this is the biggest purchase you're ever going to
Exactly.
make in your, mostly,
Right.
unless you're going to go buy a yacht tomorrow. But
Chris,
the average
I'm
is
not.
Chris had a great saying that I kind of adopted, I use all the time. He's like, marry your house,
Yeah.
date your rate.
Exactly.
Yep.
Right? So if rates come down, you refinance later on.
Right.
Right.
Right?
Yeah.
And that's what you would have done with a 13% mortgage. You probably refied multiple times.
Yeah.
Right.
Yeah.
Absolutely.
And
right.
you have
If
to.
rates go up,
Right.
you're going to be
You're
glad
gonna
you
feel
had
great about it.
6%.
Exactly.
Exactly.
Well, the other thing too is look at it that way from that standpoint. That house is never going to be more expensive,
Right.
right? Because the interest rate's going to go down
Yep.
at some point. You're going to refinance. You're going to build up more equity. Maybe you
You're
want
going
to
to get paid more.
Exactly.
Yeah.
Right. Yeah.
And you're building equity for everything you do to it.
Right.
So, again.
And tax benefits.
Right.
Yeah.
Right.
Exactly.
So I think the biggest question is when someone is brand new, saying, what loan program?
Right.
And the problem is there are some loan programs that are great for like a VA loan,
Exactly.
or what's the other one with no money down?
USDA.
The USDA.
Yeah.
Yep.
Now they're great. However, from a listing agent's point of view, how are they looked at? When you list a
Absolutely.
property.
Yeah.
Got to be honest.
Right.
We
It's-
like honesty.
We like to see, as a listing agent, you want to see a bigger chunk of money
Right,
down.
right.
You don't necessarily like these 0
Right,
percenters,
right.
even though they're great. I've never seen anybody necessarily
Yeah.
walk away because of it.
Yep.
It's a psychological thing, right?
Right.
Because the sellers can pick and choose whatever they want.
Right,
They'll take the cash offer if all things are being
Right.
equal.
right.
Right.
But yeah, it's tricky for those people.
Right.
Mhm.
There's a ton of programs out there, which is great for people.
It's almost too many.
Well, that's the
Yeah.
that's,
And that's
the
what
thing.
happens is all of a sudden there's confusion created.
Right,
And,
you have
know,
FHA,
Yeah.
VA, conventional,
Right.
USDA. There's loans for doctors and dentists and
Exactly.
So
Yeah.
I think the most important part is breaking them down, and again, that comes with trust
Right.
and figuring out what's what. And at the end of the day, your credit needs to be solid,
Solid. Yeah.
and you need some money because how many times do we hear, "Well, I have like $1,000 in the bank." Okay, well, your home inspection is going to be $700.
Right, exactly. Yeah.
So
Yeah.
we need to, have some money here because again, let's talk about the fees that are associated with this.
Closing
Because when
costs.
you're exactly
Yeah.
I mean, it's going to cost you first month, last month security deposit to rent a place,
Right,
right? So
right.
you got probably $5,000 right
Right.
there,
Exactly.
or at least
Yeah.
you're going to be
Yeah.
living on mom and dad's couch.
exactly.
Yeah.
So fees, again, you made a great point. So if I'm going to go rent an apartment, we have tons of rentals. They're going to, if say it's $1,500 a month, you're going to pay first month, last month security.
Mhm.
Right.
So right there, it's $4,500 you need in the bank.
Exactly.
So if you can save up that money, especially for first-time home buyers, if they're living with their parents or wherever, save your money.
Mhm.
Because again, when you own a house, stuff comes up non-stop.
Absolutely.
We had a girlfriend, and I don't even want to mention her name, but the poor thing, the hot water heater blew up,
Oh boy.
Yeah.
and literally water was like a waterfall that I've never
Oh, wow.
seen coming through a door.
Right.
That stuff happens.
Well, it's funny because I'm a big proponent of unless your down payment is going to move the needle, right? It's going to make a major difference. So, an example, I had a young couple. I think they bought in this area, and they put 7% down,
Okay.
right? But that depleted all their savings. So my conversation to them was, why don't you put 5% down? Nothing. The program doesn't change itself, right?
Yeah.
It's your rate's not going to change. Nothing's going to change. You've lost, $2,000, 2% of equity, but you're keeping that in the bank. It was like, say, it's $10,000.
Yep.
Your monthly payment changed by like $20.
Right,
But they
right.
wanted the lowest monthly payment. But I'm like, but you've depleted all of your resources. You
Right.
have nothing left for the water heater.
Yep.
So now it's going on your credit
Or
card.
Jordan's
Doesn't-
furniture.
Exactly. Yeah,
Exactly.
yeah.
I mean, the thing is too. So for someone like me, I get obsessive. My goal is to pay off my mortgage.
Right.
It's only a year old.
Yeah.
However, but hey, if you don't have goals,
You don't like
Exactly.
debt.
I
Yeah.
don't like debt.
Oh,
So
okay.
and I like to keep my credit as no. And again, we're going to talk about the
You're
credit back.
unusual, by the way, to do that. That's
I-
good. That's
Yeah.
good. That's
Right.
a good thing.
But I think I was reading, pay one extra mortgage payment a month.
Yeah.
So I was like, well, what if I pay two? But
Right.
the thing is, it's not the smartest because I have liquid cash here,
Right.
but I'm only paying 2.75%.
Exactly.
It's
on
money,
that
money
money.
almost.
So why am I
Yeah.
even
Yeah.
bothering?
Right.
Keep my liquid cash so I
You can invest it.
buy my dog toys
Right.
and dog treats and all that. But and that's another thing.
Yeah.
I did read when you're paying an extra mortgage payment a month, what does that knock it down?
I forget what that is. That's but it's
Still
It's
obsessive.
significant, though. It
It
is
is.
significant.
I think it now it's
is.
up
It's
2,
significant.
3, 5 years, something like that.
Something crazy, and I was
Yeah.
like, "Are you serious?" So of
Right.
course I've done it, and then I'm like, "Wait a minute,
Yeah.
I'm freaking it's 2.75. Am I out of my mind?"
I'm actually not. So I use a spreadsheet that I from work with clients. And I always say I call it the menu. I'm your server.
Yep.
Here's the menu.
Yeah.
They all look great to me, but I don't pay your bills. So you decide it's mapped out. So it's got 5 different options. Anywhere from a 30-year fix to a 10-year fix
Yep.
or a 10-year term. And but it also has in there what if you paid $100 extra per mortgage payment, what
Right.
that would do too,
Right.
as opposed to making that one extra payment or however it works out. But actually just simplifying it. In my own head, it'd be more simple to instead of spending $2,000 a month, which I don't think that actually happens in a mortgage anymore.
Right.
We're gonna spend $2,100. What impact does that have? And it'll actually map it out.
I love it.
Yeah.
And again, education is the most important part in this. I mean, you're not going to go into something blind and go spend $350,000 on a property not
Right.
knowing anything.
Exactly.
So that's why, again, you need to be able to trust someone where you can ask these questions. I bought my first house, knew nothing about anything, and we're talking prepayment penalty.
Right.
So I go to sell my house, I'm 25 years old, I'm like, oh my God, I'm going to make all this money.
Right.
Go to the closing table, like, oh, $9,000 for a
You
prepayment.
had that on a house?
Yes.
A prepayment on a house?
Yes.
That's like a
Who's your
commercial loan
lender?
thing.
I can't say
Wasn't
it.
Chris, was it?
And I haven't forgotten it to this day. And every time they
Wow.
want to do business with me, I'm
Wow.
like, remember my
Yeah,
first
exactly,
house 20
right,
years
yeah.
ago?
Cost me $9,000.
I see that on commercial loans. I don't see that on
They're
residential.
not legal anymore, are they?
You can do so a qualified mortgage. It falls out of the parameters. You can do a non-qualified, which is they call it non-QM. It's sort of self-employed borrowers, that sort of thing.
Okay,
It
but
gets,
not common.
no. If you do a conventional loan, no, you're not
Right.
going to see it.
That would
This-
kill you refinancing.
Exactly.
This
That's
is
terrible.
why,
Yeah.
and again, I'm guilty of this as well. Read the paperwork, but you're sitting at the closing table, sheet after sheet.
Right.
Like, what the
Well,
hell
you
is
should
this?
have a loan term sheet before
I
that,
know,
right?
but again,
Like
at
a one
25
summary.
years
Exactly.
old,
Right.
my agent was like gone in Mexico, and she's
Right.
gone, and I had,
Yeah.
here I am, 25, naive as hell.
Right. You
And
just
I'm
want to
like,
buy a house.
Right, and
Yeah.
then like, oh, we're taking 9,000 from this. I'm like, for what? I
Right.
mean, I was like devastated, and
Yeah.
literally to this day, I drive by this mortgage company, and I'm like, I hate you, you screwed me, you know. But
I'm glad you let bygones be bygones.
She doesn't
so
know
much
what
for
that is.
letting things go.
Yeah.
Oh.
Yeah. I don't know
But
what grudges
that's-
are.
She's
stuff
gonna
we
take
need-
that to her grave.
Right.
To the grave. But that's why you need
That
to
comes
know
down to trust.
Exactly. So
Oh,
again, that is like the name of the game in real estate, trust. So when someone comes to you and says, "What's MI?
Right.
What is it?
Private mortgage insurance.
What is that?"
Well, all right. So it insures your down payment. If you don't have 20% to put down, it's insuring the difference. So let's say you're putting 5% down. It's an insurance policy insuring the 15% that you don't have to get to 80%. So you didn't put 20% down. You put 5. That 15% gap is being insured.
Okay.
Which I was in a situation that actually we were in that training session together, and I had an agent wanted to buy a house, and she said emphatically, she is not paying PMI. And I was like, okay.
Well, it doesn't really work that way.
Exactly.
huh?
I'm like, well, I wish I had a magic wand for you, but
Right.
but no, we ended up going. She actually did buy. We went through the whole process, and PMI is actually relatively inexpensive right now because loans are very clean. You're not getting a loan today unless you
Right.
qualify.
Right.
So subsequently, it's insurance, right? Everything's based off of risk. So those insurance policies are actually they're pretty inexpensive. I mean, I would say $125 for PMI.
Right.
But
It still sucks having another payment.
But
though.
here's the thing: if you don't pay that $125 per month extra, right?
Yep.
You're not getting the appreciation in your house.
Right.
Like so, it's do the math basically is what it
Right.
comes down to, and at the end of the day, you're coming out far ahead,
Yeah.
buying the house, getting in, build equity, refinance, get a low rate, get rid of the PMI.
Yep.
It's a perfect
And if
scenario.
you're putting 20% down, you obviously avoid that.
You avoid it, correct?
by the way, rentals are no picnic right now, right? Rentals are very expensive.
Yep.
It's throwing money in a hole. You're not earning any equity.
Totally.
Right. Yeah.
And you figure if you have first class security, say it's $1,500, that's $4,500 in the bank.
Yeah.
Right.
They talk to you about a loan program. Here's my $4,500. What
Right.
can I get? And I'm going to own something.
Exactly. And there are ways too. If somebody has limited funds for down payment and closing costs, there are ways of covering closing costs.
Right.
They're not ideal, but you can do it. I can increase the interest rate, right? So say we go from 5 to 6. There's more profit in what they call the yield spread.
Okay.
And you give back credit to the borrower. So there's just these creative
There's
ways
right.
of doing things, and it's
If
again,
somebody has good credit, there's a way to figure it out. Is
Exactly.
that right?
Exactly.
Is that right?
Yeah.
Okay.
And again,
Absolutely.
a takeaway from here is keep your credit
Mhm.
good.
Yep.
I cannot stress how important that is.
Mhm.
From
Pay your bills on time.
exactly from a very young age.
Right.
That was always drilled into my
Exactly.
head. And at the end of the day, it's a fact
You
because
could have a
anything-
$20 credit card bill that you didn't pay, and that's going
Right.
to kill you.
Exactly.
Right,
It's-
right.
Kill
I mean,
you.
it's amazing what happens with your credit when you don't. You think it's just going to go away. I'm just going to
Right.
ignore it. No, that
Mm.
definitely does not happen.
Exactly. Yeah.
So, you guys were awesome. I hope, the takeaway for today is find trusted professionals
Mm-hmm.
that you can work with, that you trust. And, obviously Chris Heaney, Province Mortgage, Brad Moore, Century 21. I know you had a little something that you
Yeah,
wanted
well,
to do.
you know what today is, right?
I don't.
You don't know what today is.
Besides President's Day?
It's the day before Mardi Gras.
I actually forgot about Yes!
Never a missed opportunity to get dressed up, Bradford.
No, we are going out to lunch after this, so we will
I want Chris to put this in. Chris, don't break the strap on it.
I think it's gonna fit in my head. was those little circus monkeys that
This
run on
is
the little
so,
bikes?
right? This is so hilarious. All right, so we are definitely going out after. Who knew you would come prepared like this? This is amazing. I love it. There, I will share with you.
Oh, thank you.
Happy Mardi Gras.
Awesome.
Brad, it's never a dull moment with you. We'll be going.
I can't even take you serious now.
What is this, eyes wide shut? What is this?
On that note, this is another Real Talk podcast. Chris Heaney, Brad Morris, I'm Andrea Castanetti. Thanks for tuning in. See you next week.